Welcome, everybody, to the latest episode of the T3 Alpha Show. My name is Michael Comeau. I am your host, and I am here with my good friend JR Romero, who is doing his best to ruin the intro by making me laugh. Now, JR is one of the hardest working people I've ever met, and we could spend all day talking about the 50-day moving average and MACD and RSI, but I want to talk about something a little bit different today, and it's having an immigrant mentality when it comes to trading and life, because JR came to America with nothing, and now he's a professional trader. He's running 2 live trading rooms at T3 Live. He has a family. He's been a fighter. He's sold DSL internet access on the streets of New York City to make things happen. So I want to know what makes this guy tick. So JR, how are you today?
It's great to be here, Michael.
Awesome. So why do you work so hard?
I love it. I love winning. I love making money. I love building things. It's a bit of an addictive rush.
What's more important, winning or not losing?
Winning.
And have you always been like super competitive?
Yeah. Most businesses I've started, I'd say maybe 40% have failed. But overall, it's been a thrill no matter what. And that's life, a lot of enterprises, wrong time, right place, right time, or whatever, and you end up not being able to succeed. But I love building things. I love the thrill of, setting a goal, having a vision, and then making it happen. So I'm a huge fan of that.
Okay, yeah. So we were talking a little bit offline about both of us love being Americans. Like I think we can all agree that this is not a perfect place, but of all the places in the world we could be, as far as I'm concerned, this is the best. So what did it mean to you to come here and become an American and, again, just make things happen for yourself?
Simply put, I think America is the greatest bastion of liberty, creativity, and innovation that we've seen in centuries. And it's a place where if you have a vision and you work hard, there's still an American dream to be had, which is very different from where I came from. If you weren't connected, if you didn't have a lot of outside help, basically working hard would guarantee nothing. So I'm extremely thankful to be an American and to be a part of this great social Republican experiment. Republican, I mean, as in Republic. Everyone's going to send me angry emails.
Listen, people are going to be angry no matter what. I've been accused of having Trump derangement syndrome and all kinds of things. If you want to complain, go in the comments. We appreciate the engagement. It just boosts the algorithm. So all you complainers get down there and start bitching and moaning, because all it does is help us. So for you, was it America or nothing?
I was looking at the London School of Economics, and I spent several months living in London. I couldn't hang with the drinking. I mean, 3:00, I'd go out with the boys, and I had 2 Scottish roommates, which was, in retrospect, pretty damaging to my liver. Those dudes would be 5-6 Guinnesses in and still sober. I couldn't hang with that. The weather was really dreary, and America just seemed more innovative. England has there's a sort of macabre vibe in England. They had an empire, they lost it, and there's still a sort of weird social resentment about that. Whereas America is still bright-eyed and bushy-tailed by comparison in many ways. Very, very much a more optimistic place, if you know what I mean.
Yeah, I mean,
so
do you think that's still true today? I mean, do you think people have a lack of appreciation of how good we have it here?
I think there's 2 parallel realities. I think there's a reality of social media, which is deeply scatological, and the world's ending, everything is lost. But if you go out in the real world, most people aren't obsessed about identity politics. They're not obsessed about budgetary politics. They're not obsessed about policy. They want to work hard, have a beer when they get home, see their friends, do American things, and this country is still the world's greatest bastion of innovation, of education, of research. America produces amazing things. So once you leave the mental trap that is Twitter and Facebook and all this nonsense, I think it's very much still that way. I've seen it firsthand.
Okay, so I know you studied computer engineering at Columbia. When did you transition into the markets?
Well, I was a part-time student, full-time trader in college already. I got caught up in the late '90s feeding frenzy of stock trading, and went bananas, made millions of dollars, and then proceeded to lose millions of dollars in the year 2000 when the market crashed, which was a bit of a disaster. And then realized I knew absolutely nothing about the markets. You could throw a dart at Yahoo or Netscape and make money. And then from there, I was down and out. I started selling basically bandwidth in the streets of New York City. I would go down Silicon Alley on 23rd Street, where I eventually set up my office, and I would literally knock on doors. I worked 14, 15 hours a day, just knocking on doors, selling bandwidth services on commission, and basically made enough to start my first company, and made enough to finance my first business. So it was quite an experience. Nothing like a market drawdown to remind you, give you a go kick in the ass and remind you that you know nothing.
Now, it's funny. I'm actually wondering if you ever tried to sell me internet access, because I worked for a real estate company in college, and back in those days, people would just wander into offices. This was pre 9/11, so it was open season. Like, you could walk in pretty much anywhere and just knock on doors. So I actually wonder if you barged in and tried to sell me internet access. Okay, so
by the way, I had a map of every building in New York City and every floor plan of every office. I was very methodical about it. So if you were anywhere between 14th and I don't know, 34th Street, 10th Avenue to Lexington Avenue, I probably knocked on that building. I was on fire, dude.
Yeah, I was at 280 Madison Avenue, which was on 40th and Madison. Okay, all right. So it's interesting you bring this up, because you always describe yourself as a merchant. And in fact, JR once told me I used to be a butcher and then I turned into a merchant, at least when it comes to trading. But why do you call yourself a merchant? Because I don't think I've ever heard anybody describe themselves as a merchant.
I think this business really requires a merchant mentality, and I'm a serial, sort of addicted entrepreneur. I have 3 other companies that I own outside of trading. I mean, obviously, do this full time, but I have 3 other businesses that I run to some extent. And to me, they're all enterprises, just like trading is a business for me. I have these other businesses and investments that thankfully are doing really, really well. And, trading is the ultimate merchant experience. You're literally haggling over price all day, finding areas of interest, finding inflection points in price, and deriving, guessing where momentum, the winds of momentum will shift, where price is really going to accelerate in one direction or the other. But really, at the end of the day, we're just selling rugs out here. We're selling tulips during the tulip craze, and it takes a real merchant mentality. I try to always, explain to my traders that technical analysis and indicators are useless if you're not thinking like a merchant. They're just measuring tape for the market. You first need to understand what motivates people, what motivates price, what makes price change levels dramatically. We call that momentum. And once you understand that, and understand that you're really trading against people and sentiment, whether they're computers or people, it doesn't really matter. Then you can go hog wild on the technical analysis. But people tend to put the cart before the horse. And I always tell people, if you're doing what everyone else who is failing is doing, you're guaranteed to reproduce those results.
Okay, so are you sort of looking at stocks and visualizing a balance between buyers and sellers?
Constantly. All my entire day consists of looking at volume price analysis, looking at market profile, and understanding where the most transactional interest is in a stock, and when we're going to be in a period of accumulation versus markup. And typically, I like to get in when the markup starts. I'm a breakout trader, and that's really been the secret to my success. Shut off the noise, shut off the indicators, all this nonsense, and just really put your mind into what other traders are thinking. So we know when to run the stops. We know where people's stops are usually most of the time. You have to think. You have to empathize with what other traders are feeling. Are they feeling ecstatic? Are they feeling fear? Right? What is the market doing in terms of breadth and volume? What is the market doing in terms of general trend, sector strength? What is the active narrative in the market that's dominating the tape? These are the really important things. What are the relationships doing in the market? Are we correlated positively or negatively with a 10-year? What's the bond market doing? Why are we inversely sometimes are we correlated positively with the 10-year yield and sometimes negatively, et cetera, et cetera. So those are the things that I find give me an edge and help our traders in our room.
Okay, everybody who's watching, please like, comment, and subscribe. And down in the description below, there is a way to learn from JR for free. So make sure you check out those links down in the description below. Okay, so before you said you made millions of dollars during the dot-com boom, then you lost millions of dollars. Now, I know for a fact, most people never came. What'd you say?
I lost it all. Not just millions. I went back to zero.
Yeah. We all know, JR, nobody's perfect. but you came back. And the reason I'm bringing this up is because, I've heard this from a lot of people who were around in the 90s. They made a ton of money. Then they either bought mansions and Ferraris and went broke that way when the market didn't go their way, and they never came back, so they went to do something else. But you did come back. So how did you figure out what to do?
How did I figure out what to do?
Yeah, because you made a bunch of money, you lost it all, you started at zero. So how did you get on the path to success?
I was always fascinated by the markets. My father was an economist and traded a lot of currency, so it was dinner table type of conversation. And I was absolutely obsessed with succeeding in the markets and told myself I was going to succeed no matter what. I went and borrowed $75,000. I blew up that account within 2 months after the crash. And then I borrowed the same amount of money again. And my wife at the time, she said, you better cowboy up. That's what she said. You got to make this work. I said, okay. So I committed to making it work. I made it my life's raison d'etre, and eventually I got some professional training at a fund, and the rest is history. But it was a matter of total commitment. I knew I wanted to do this, and I knew I wanted to succeed, and it was a battle.
Okay,
it was a real battle.
Sounds like it. And I find it interesting that you said your father was an economist. Now, was he a successful trader? Because I've heard a million people say this, that, economists are not good at predicting anything in markets. So was he actually successful in his trading?
Yes and no. So he made a lot of money on the Deutschmark, and he lost a short on the Soros pound short. That wiped him out. That was I think 1991 or 92. I find currency trading very, very difficult, and I made a note to myself to promise myself never to become a currency trader. I think it's maybe one of the reasons I don't like Bitcoin so much. But no, he did make a lot of money, but very tough trade when Soros shorted the pound. He got hit hard on that one.
Okay, now, as far as your trading style goes, like, would you say you're primarily technical, or like, are you using fundamentals, macroeconomics, things like that, or are you strictly technical?
So there are some purists who only look at the chart, and I think that's kind of silly. I think it depends on the instrument you're trading and why. Like one of our best swings this year was Caterpillar, and the theory behind that trade, the thesis behind that trade, was looking at all of the fundamental data that pointed to massive increases in investments in construction spending and in infrastructure, and then deriving levels and looking at a chart that clearly give us all the body language that it was, going higher. So I think understanding story, understanding narrative is really, really important. And for certain trades. And then there's other charts where I look at intraday and I say, okay, we have an air pocket of liquidity in the S&P 500 through, 68.30. That's what we said this morning. And I said, you got a short to 68.19, and it's printing right now. Right. So some trades are technical in nature, but I'm still playing that price action narrative in my head. I'm still thinking, all right, well, these people are buying the dip here into VWAP at 68.26, okay? And these ingrates aren't realizing that there's a massive volume gap in the profile under 68.23, and they're all going to get shaken out to the bottom of the value area at 68.11. They just don't know it yet. The market makers are probably going to run the stops. They're not going to hold S2, and your highest traded volume in terms of liquidity in the market is 68.11. That's exactly what happened. So, I don't think of it as technicals versus fundamentals. I still think of it as narrative, right? What are people thinking? Okay, and why are they right or why are they wrong? So I think it's kind of a false dichotomy. I know there's a lot of traders at T3. They're almost like technical analysis jihadists. If you so much as bring up if you so much as bring up a balance sheet or EBITDA, they go bananas. They're like, how dare you? I think that's very silly. I tweeted the other day, our friends at what's it called, TrendSpider, put out a trade idea saying Meta was going to bounce because they had a really nice, flashy, oversold earnings indicator that basically calculated forward PE and said, this looks great for a bounce here. And I basically replied to them, look, the problem with Meta here is that in terms of cash and equivalents, you're equaling $44.5 billion now. A year ago, it was $77 billion. And so you're going to have a real investor panic here, most likely, that's going to keep on driving Meta lower until they start, financing their capex through cash flow, right? And the reason I said that is because I know how a lot of investors think, know how a lot of institutions think. So having some grasp of what other people are thinking based on the fundamentals, I think is important. But it's not about understanding the fundamentals. I don't care about that as much as understanding what other traders and whether other institutions are thinking. And if that comes through technical analysis or through fundamentals, I really don't care, which is why I always say, being a chart purist alone is just very silly. It's an obtuse way of looking at the market,
Yeah, I think it's interesting because I do feel like most people who say they are chart purists are not, because they're always commenting on the news and political trends, and we all have biases. I would say the only person I've ever met, I think, that is pure chart is our friend Sami Abbasad. And he's been hugely successful.
But he still knows when every earnings date is. So, yeah.
Well, he has a technical method for as long as it trusts. Now, I love Sami, though I do think he has one blind spot, which I think he loves Tesla. And I just get the feeling that in most of the time, he finds a reason to love Tesla. Though I know he has sold it and shorted it at times, but I do think it's been hilarious how many times I've asked him about Tesla, and he's been hugely bullish, and he's been right. Okay, so how do you know when you actually have an edge? Because especially with things like stories, like for an example, there's nobody on the planet that doesn't know about AI now, and now that there are things like nuclear power and these power grid names that have done amazingly well. So how do you know when you actually have an edge when it seems like all the stories are out there everywhere all the time?
Well, I don't know if you remember when we were starting doing our Wednesday wrap or our Wednesday talks. One of the first thing you asked me was, JR, what do you think is going to be the next trend after AI? And I told you it's going to be quantum computing, right? Quantum computing and energy. And like, it doesn't take a genius to sort of extrapolate within the arc of a big trend, right? What the parallel businesses are going to be to really fulfill that trend. So I think of trends, and I think of what's it called? I think of trends and the progress of sentiment based on extrapolations of what industries are going to be necessary to fulfill those. Just like the Caterpillar trade, or how we called out. You remember the utilities? We called those out as the power drain on data centers, and we said quantum computing is going to get looked at again very, very strongly. I remember we called out IonQ as an interesting trade like a year and a half ago when I was trading at, I can't even remember. It was back in 2024, in like November of 2024. I was trading at $14. So I do a lot of that.
Okay, now, is it important to actually understand the trend, or simply be able to predict which trends people will believe in? Like, and what I mean by that is nobody out there knows what a quantum computer does. Like, if you surveyed like 99% of, I would say if you surveyed every IonQ long, they would not be able to describe what a quantum computer is. So do you even... listen, I've gone into ChatGPT and said, give me some current practical examples of quantum computing in action. And I don't get it. My brain is not there. So again, do you need to actually understand what is going on? Or do you just need to be able to predict the next hot thing?
There's a big difference between understanding technical and scientific fundamentals and understanding what sentiment is going to be pressing based on the technological trend at hand. I also said storage was going to become a big issue a year and a half ago, right? The telemetry needed for fully self-driving vehicles in terms of non-volatile RAM is enormous, right? And we saw these massive trends in SDX and WDC and SNDK of all players, massive moves, right? So you don't need to understand how SNDK makes their, and VRAM, or how Micron makes their hard drives, to understand that if you're going to store trillions of gigabytes worth of self-driving telemetry data, that you're not going to be able to procure enough storage to fulfill that need for many years, right? So just understanding those technological megatrends at a very basic level, I think, is a very good way to gain an edge early. And then you watch the chart and you see it come out of a big accumulation base, and you start really going crazy. Same thing with gold. Remember, we predicted gold, the gold rally like 2 years ago. Part of that was my bias that the market was going to start losing faith in U.S. Treasuries. Yeah, and geopolitical tensions with China and Russia could potentially see a lot of dumping of U.S. Treasuries and sending people scattering for alternative assets.
Yeah, Jay, and just for everybody listening, JR has made some wild predictions that came true, like NVIDIA 200. He called it when it was in like the 120s. He called gold, silver. He predicted Bitcoin 126,000.
Yeah, the nose had pulled back.
Yeah. So me and JR on our last webinar together, we had a little fight because I said that he missed it by 1,000, and JR is like most traders. He does not forget a victory ever.
Ever. I'll take all the wins I can get.
All right. Okay. So I'm glad you brought up quantum computing and, AI, because we've talked about these to death. Now, like, are you using AI in your actual trading process at all?
No. Now, I have found that in terms of data collation and quick lookups, it's super helpful. Like if I need to format a giant Excel spreadsheet or whatever, like I don't code anymore. I just send it to Grok or ChatGPT and it does the heavy lifting. I'm looking for a good AI engine for financial data. So if you have a good one that you like, I would certainly use it for research, but I don't use AI for trading. I understand human behavior far better than an AI, at least for now.
Yeah. Ted Zhang, who I interviewed here, he recommends Perplexity because Perplexity seems very good for real-time financial data. Like ChatGPT has told me some truly crazy things, like that the
it
all-time
flips out
high,
and makes stuff up sometimes. It's hilarious.
Oh yeah, like it told me that the all-time high in the S&P 500 was 4,400. Like
what?
It does not recognize. One of my favorite things was that it does not recognize CoreWeave as a stock. Like if you type in CRWV, it would tell me, no, it's CrowdStrike. Your ticker is wrong.
That's funny.
So yeah. And I find they're also inconsistent. I will have some function mapped out and it'll work perfectly for 6 straight months. And then all of a sudden, day 181, it just stops working and it starts screwing things up. So it is interesting. So do you think, so I am absolutely an AI skeptic because I see like, the thing for me, it's like the dog's not barking. I'm not hearing enough success stories of like the biggest one I've actually heard, I think might be Jamie Dimon saying we spent $2 billion on AI and it saved us $2 billion in expenses, which is actually tremendous because those gains compound over time.
Yes.
And, I guess there are some companies that need fewer employees, but like, I mean, would you take the other side of that? Because I feel like we should be hearing more success stories about AI.
Well, there's a big difference between artificial general intelligence and the AI we have today. Once we achieve true artificial general intelligence, you're going to go from a heuristic model to a reasoning model, and that is going to be the biggest game changer in the history of humanity, bigger than the wheel or the agricultural revolution. Right now, when you're using AI, it's basically compounding all of the questions and all of the answers, right? And it's basically imitating and mediating prior answers. It's basically using a heuristics engine. It doesn't reason, not like you and I do, but that's going to change in the foreseeable future.
So you think AGI will be a reality?
In the next 5 to 10 years, yeah.
I think we might have to make I'll bet you $1 American. We do not have AGI by New Year's Day 2032.
Let's make it 100,000.
This is about pride, which is more important than money.
All right.
JR, don't you know I am driven by more than anything, I am driven by being able to say, I told you so.
It's not about the money. You're a real New Yorker. I told you so. Are you sure you're not Jewish?
I feel like I have many Jewish qualities. I'm a lapsed Catholic, but I do think there is something in my brain that is semi-Jewish.
That's a very few steps of separation between lapsed Catholic and Jewish. You got the cynicism down all right. So
yeah. So have you ever heard, JR, of the famous photographer named Richard Avedon?
No.
Okay, so he was basically probably the most famous photographer of all time, and like his son said that he was an atheist, but he had all like the personality quirks and issues of being like like a New York Jewish guy. And it was like, I always found that interesting. And sometimes I think that a little bit like that about myself, but moving
I've
on.
actually seen your photographic work. It's pretty impressive. You take a hell of a picture.
Yeah, I don't shoot that much anymore. I actually got this little like plastic toy camera, which I have to start carrying around with me. Okay, now, so, all right, so I want to talk about like outside interests and stuff. I'm glad like you brought up art, because you are like this cultural reference and quote machine. You know, it's
Sure.
you know, like the Fed can come out and like the market's crashing, and you'll be like, you know, this is worse than the sinking of the shore you at the Battle of Midway. Like you always have something. So have you been like, I would guess you might be one of the, like, we've never discussed this, and JR and I have talked a lot. I suspect you might be one of the most well-read people I've ever met. Is that true?
Yeah, I'm constantly reading books. I like to tell people, as a Columbia graduate, I'm an educated idiot. I read a lot voraciously, and I'm interested in the history of the world and the social sciences and the arts. So I feel like all those things make you a better trader in a way, you know?
Like, so, yeah. So how does that inform your trading?
Because trading is the ultimate social experiment. It's the ultimate competition, interaction between people and their psychology, their sentiment, their fear, their greed. You're reading emotional cues. You're extrapolating what the person on the other side of your trade is thinking and feeling, and you're constantly examining human virtue, human psychology, human greed, and outthinking the competition. That's what we're doing here. It's a game of chess with money.
Okay, do you think that's changed at all? Like, you know, I feel like people don't really talk about algorithmic trading in HFTs that much anymore. I feel like it used to be a hot topic, but not so much anymore. But we do know things are more computerized now. More people are, you know, using computer programs and things to help them trade. More people are doing statistical analysis and all these things. But do you still think human nature is at the heart of all of this?
Human nature is at the heart of all of it. So many HFTs are so incredibly flawed and so bad that they end up giving you an edge in trading. You know, they misread the news all the time. You'll get a quote from Donald Trump or Besant or Powell, and they'll run the S&Ps up 30 handles, and you're going, are they just trying to give away money? Like, are they just trying to lose on purpose? You know what I mean? So, you know, the HFTs are a never-ending opportunity machine more than anything else.
Okay, so how do you see that? Because people always assume that it's, you know, some, you know, supercomputer in a dark room somewhere being programmed by a wizard. So, like, how do you actually see that out in the market?
Well, having been part of several teams that wrote HFTs, I can tell you they're many times deeply flawed, and most of them lose money. You know, most HFTs lose money. The market is a Pareto distribution curve of talent, and there's multiple tracks, right? Some HFTs are looking to make 4 to 12 ticks out of a trade, and if you're trading the S&Ps at the bottom of a rising wedge, maybe you're looking for 25, 30 handles worth of trade. They'll actually sometimes give you a really nice shakeout, improve your price, and you can outsmart the HFTs just like you can outsmart a person. They're made by people, and they're often deeply flawed. The HFTs, in my opinion, are great. They provide a ton of liquidity and volume in the markets. They keep things very lively, and they make, I think, trading a lot easier in some ways.
Okay, let's talk about being outsmarted, because, you know, like for every great trade you make, there's somebody on the other side of that trade. Like if you're buying gold and somebody selling it and they're missing out, like, like how do you stop yourself from being outsmarted?
You're going to be outsmarted all the time. I mean, I always bring up the analogy of boxing. You know, you're going to have, or baseball, what's a great stat in baseball? If you're a top batter in the league, what's your stat?
I haven't watched baseball in a long time. I would say you're probably batting like 340 or 350, something like that.
Yeah. Well, day trading, you can be right 1 out of 3 times or 1 out of 2 times. And as long as your trading efficiency is correct and you're managing money, you're making fortunes, right? So I always try to inculcate this into my traders, the people I help and guide in our VTF, our virtual trading floor, that it's not about being right all the time. It's about staying right once you're right and not staying wrong. This is a game of averages, right? You're playing statistics, and when you're wrong, you cut your losses. When you're right, you add. I add to trades. I really get big. I let them work as much as I think they can to fulfill their potential. So it's not about constantly outsmarting your competition. It's about outsmarting your competition, statistically enough so that you can let those winners really make you the money they're supposed to. To me, a trade is like an employee. Okay, if it doesn't work out right away and doesn't do what it's supposed to do, they're fired. Trades that do what they're supposed to do are promoted. Money, capital is invested, time is invested into those trades, and I let them go to work.
Okay, do you care about batting average? Because a lot of traders are obsessed with, I need a 70% win rate, 80%, whatever it is. Do you care at all about your batting average, or do you just care about the P&L in dollars?
I care about trading efficiency, and I care about expected value. Those are the 2 things that really make the difference between winning and losing in the markets. Trading efficiency is really important. As is expected value, right? So you're taught risk versus reward, right? So the problem with that equation is if you're right 80% of the time, and a lot of my traders, even the novice ones, even the intermediate ones, they'll have a win to loss ratio of 80%, sometimes 70%, and they still can't make money in the markets. And the reason for that is because they really manage money horribly, right? And they have that 1 or 2 trades in the day that are losers, and they don't know when to cut it off. They let their losers run, and they cut their winners early. So trading efficiency, right? You're minimizing your costs and you're maximizing your outputs. That's really all that you really have to do. So batting average is definitely not nearly as important as how efficiently you manage your winners and losers. And the other is expected value, right? We're taught risk versus reward, and we're never really taught probability. That's something that you have to work out on your own as a trader. You have to backtest, run your stats, which is very, very important. Most traders don't do that. But if you're really working on a triumvirate, okay, instead of a binary, you're going to be much better off. Trading efficiency, when you include probability at the trading, allows you to exponentially size your bets so that when you're right and you have a high degree of conviction in the trade, you size up really, really big. Whereas when you're not so convicted in the trade, right, you will manage your size differently. And that's a simple context and a simple idea. But as far as a concept, most traders I know who are struggling really don't grasp that, right? Like I made more money in September and October of this year than I did all of last year, and the reason for that is because some of the setups had such high expected value that I really sized up exponentially. I was taking enormous trades, and the risk was worth it because the likelihood of being correct and being able to add to those trades was so high that it was worth the risk. So, we're taught a very kind of binary, what's my risk, what's my reward? But if you really stop to think about it, some trades are really like A+ setups at the right time. The market is so liquid, right? The actual feeding frenzy, the veracity of traders is so high that the likelihood of a trade working is really, really high, right? Like I was comparing September and October to April of 2020 this year. There was such optimism in the markets. There's so much retail money running around, right? The pool of participants in the market increased so much that in terms of the general Pareto distribution curve of talent, if you're an advanced trader, right, and you're playing in a poker table, instead of playing in a poker table with 10 other professionals, you're playing in a poker player with 10 professionals and 800 newbies. You're going to make a lot more money. You know what I'm saying? If you put me and 9 other professionals, and we all had to trade against each other, maybe 1 or 2 of us would make money, no matter how advanced we are, because basically, as you shrink the distribution curve of talent, and you have, just like magicians doing magic against each other at a convention for magicians or whatever it is, right? The pool of capital and talent shrinks so much that it makes it much harder to gain an edge on the market. Whereas when you have these crescendos of optimism in the market that draw in a lot of retail money, it's much easier because you're trading against a lot of novice money, people who are not necessarily so adroit and so efficient in transacting, and that makes it a lot easier. So you have to look at all these factors when you're going to size up to make sure that your expected value is very, very high. Does that make sense?
Yeah. Okay. So do you think so? Just so everybody's aware, we are recording this on November 4th, 2025. Now, do you think a lot of novice money is coming into the market? Because we're seeing numbers from Robinhood, Interactive Brokers. Trading volumes they are still going through the roof. Do you think that's a sign? And also account openings have been skyrocketing. Do you think we are at the point where there is a ton of novice money pouring into the market after a huge run from the April lows?
Yeah. So novice traders, they tend to buy like stage 3 of the market, meaning the tops. Okay. They resist the temptation of getting involved early in the adoption curve of a bull run. They get involved at the very top, then they lose all their money. Then they say, I'm never going to do this again, January, February of 2022. And these same people are coming back now after a massive 40% bull run in the S&Ps. And it's just an endless cycle of greed, misery, regret, and then greed again, So they're literally on the wrong side of the accumulation distribution bell curve. And it's unfortunate, but that's just how markets work. They're very late in terms of the adoption curve. And for that reason, they tend to buy tops, sell the bottoms. They say they're never going to do that again. And then they're consumed by greed into the next run. And instead of getting involved early in the market, they wait until they can't take it anymore and they buy the top again, which is what's happening.
Oh,
it's unfortunate, but it's true.
It's like what you said about human nature. I'm sure there's a biblical story about this thing exactly. And listen,
probably.
I've seen it throughout. I'm more of a long-term investor, but I've always been terrified at the bottom. And if I wasn't, I'd be retired now instead of talking to you right now. No offense. But okay. All right. So, but before you talked about how you had these huge 2 months. So one of the most interesting factoids I've ever learned since I was in this industry was I sent a survey to the T3 Live audience and I said, what is your number one trading goal? And across the board, the most popular trading goal was, I want to make $10,000 a month. Now that was written in manually. It was not multiple choice. So they had to manually type in, I want to make $10,000 a month. Do you think that type of goal even makes any sense?
No.
Okay, why not?
Not at all. What's that? Why not? Well, because by the time you're properly capitalized and have gained the skills to be profitable and have a P&L curve that's a nice 45-degree angle, making $10,000 a month is a trivial matter. The issue is all the dues you have to pay to get there. I always tell my guys, if you want to make $10,000 a month, become a manager at Costco. You'll get there much faster than adopting this lifestyle. It's going to take a while for you to understand the markets and to really become proficient in all of the analytical and psycho-emotional skills you have to build to do this. This is not trading is not a fast path to profits. At best, it's going to take you to 3 to 4 years of blood, sweat, and tears. And for some people, it takes 7 or 8, So, and ironically, by the time you get there, making $10,000 sort of a month is kind of a trivial matter. You know what I mean?
Okay, so what personality traits do successful traders have?
Well, you need a very, very strong work ethic. You need to be highly observant of what's happening in the markets. You need to be really in touch with the markets. I always tell my guys, if you're going to be not trading for a week or two, you're on vacation, take 15, 20 minutes every evening to look over the charts, understand what's moving, understand the dynamics of the markets. The markets are a long-term commitment. They're not just something, you're traveling through Greece and you pull out a laptop for a day or so, and then you're traveling for a month, and then you come back, and then you're trading from your Lamborghini again. This myth that's been perpetrated on YouTube with all these gurus that spend 3 months in Bali and then come back and make $1 million the next day is nonsense. The markets require total commitment. It's at least a 50 to 60 hour a week commitment. It's not just the time you spend interacting with the market throughout the day. It's also the enormous amount of research, reading, observing, analyzing that takes place after hours for most traders. So it's a big commitment. It's not just trading from 9:30 to 10:30 every day, and playing squash and golfing all day. That's not how that works for most people.
Okay, so I think everybody can agree that it's going to require a lot of time, a lot of effort, a lot of energy. Now, but should it feel like hard work? Because this is something I've been struggling with lately, is the whole idea of hard work. Because there are things I can spend 18 hours a day on and love, and then there are little minute tasks that take me 2 minutes that make me want to jump out the friggin' window. Because I think people kind of associate anything with hard work that takes time, but should it feel good when you're doing all these things, like reading charts and doing research and whatever kind of analysis, should it feel hard to do?
Being successful in the markets requires a deep fascination and passion for them. If you're reading the tape on Tesla throughout the day and it doesn't feel like you're watching a Netflix special, this business is probably not for you. You know what I mean? You put me, you give me Tesla time in sales in a 5-minute chart. It's like I'm watching a movie. You get comedy, you get tragedy, you get intrigue. Okay, you get action, you tragedy, like all these things in a span of a few 5-minute bars, right? It needs to really speak to you, and if it doesn't, it's probably not the right thing. It's gonna bore you to death. It's gonna frustrate you. You really need to have a deep ingrained passion for the markets. I mean, it never gets old. I've been doing this every day for a very, very long time, and every day is just the sequel. You know what I'm saying? Every day is fascinating. You're watching the biggest competition in the realm of humanity outside of war play out in real time in the futures markets, in the bond market, and the equity markets, and it's all. I find it fascinating. It never gets old. And if you don't have that kind of passion for it, this business is probably not right for you. It requires a deep level of commitment.
All right, and like I said before, I've seen few people with JR's level of commitment. In fact, at T3, we've tried to scheme ways to make him work less. Like literally we're trying to go behind his back to cook up ways to make him work less because he's obviously doing way too much. But it's interesting. I do feel like the most successful people I've seen in this business seem almost physically addicted to the market, where like they're supposed to be on vacation and they're still doing all their usual stuff. There's some people I know for a fact they're sneaking off to the bathroom and going on their phone and looking up everything that's going on. So JR, are you an addict for the stock market?
Addict? It's a lifestyle, man. It's tough for everybody. A lot of my traders will be out in Cancun. They're freaking trading from their phones. I'm like, what are you doing? And they can't get enough. They're on a cruise ship. They're at a wedding. They're asking me about NASDAQ levels and S&P futures. And I'm like, bro, it's just, it's a fine line between passion and addiction, I guess. There are many hidden landmines. There are people who should not be traders. There are people who are working out other life issues in the sort of foreground of the markets. They have addictive personalities. They have compulsive personalities, and they seem to recreate their life dramas through a sort of strange financial gestalt. And those people, in my opinion, should certainly not be involved in any kind of market that's speculative because it sort of brings out the worst in them. I always say some people really are in the markets to be punished. They're there to lose and recreate trauma. But then there's people, who are really just truly passionate about markets and passionate about triumph and winning and succeeding. And it's a hard thing to take away from someone, if that's what their thing is.
Yeah, it's funny. I feel like JR was just talking about me.
Every time I give that speech in my room, everyone's like, "Are you talking about me?" Like, no. Yeah.
Listen, some people, and I will include myself in this, are self-destructive in some ways, and it could be anything, but they will find a way to throw everything down the drain. I mean, think of every movie character that is given the chance to make a decision, and they're doing the worst thing in the world. That's in. I mean, this is the human condition. It's in all of us in certain ways, I'm sure. Yeah. Okay, so we're going to close out in a couple of minutes with a little rapid fire. I hope you guys are loving this conversation. Please like, comment, subscribe, all that good stuff. Especially if you're on Spotify. I'm really annoyed that we're doing well on YouTube, but nobody on Spotify gives a damn. So please hit that follow button on Spotify, and there are links down below to learn from JR for absolutely free. So JR, it is time for some rapid fire questions, which I know you absolutely love. We will not talk about food today, so you're welcome for that.
Thank God.
Okay, what is your favorite spot in all of New York City?
My favorite spot is gotta be. There's a little place. It was the house of Samuel Clemens in the 1880s. It's called Wave Hill. It's a park in the Bronx that overlooks the cliffs of New Jersey and the Hudson River. It is, if you haven't been there, it is absolutely breathtaking. It's a botanical park. It's absolutely gorgeous.
I have not been there. I've lived here my whole life. I've never been there, so I have to put it on the list. Okay, who is your favorite boxer?
Ooh. I don't know, man. Either Marvin Hagler or Manos de Piedra Duran. That's a tough one, man. That is a tough one. Everyone says Muhammad Ali, who admittedly was great.
I can't believe you're not going with Tyson just based on your age.
I've watched a lot of boxing in my day. In my house, it was either boxing or Formula One. It was just always on the TV. So I grew up watching really old replays of Rocky Marciano is also a good one, but I'm going to have to say Duran. Just
okay,
tough,
so
human toughness embodied.
Is your favorite F1 driver Senna?
Reutemann or Senna. They took risks,
Uh,
man. Ayrton Senna was the man. Yeah, probably Senna. Good guess.
okay, should they bring back the V10 engines and give us what we really want?
Absolutely.
Oh my God. I'm not like a huge F1 fan. Those new engines are an abomination. They sound like vacuum cleaners. Like they need to sound like they're going to blow up. Like
They need to sound like they're going to explode at any minute. 100%.
oh my God. The good old days. Okay. All right. Who is your trading hero?
Richard Wyckoff.
Okay. And this will close out. What is your favorite Wall Street or trading related movie?
Oh boy. That's a good one. I have to go with Wall Street.
Interesting.
Yeah, what's yours? I'm curious.
Um,
No, you know what? Can I change my answer?
yeah.
I'm going to go with The Big Short.
Mm-hmm.
Fantastic.
Like so I'm struggling between Trading Places because
That's a good one too.
just because it has that backdrop of being a psychological experiment or a sociological experiment rather, like nature versus nurture,
Yeah.
which I really love, but also Margin Call, which I feel like never
Margin Call
gets brought
is
up.
phenomenal. That scene where they have the big meeting and he goes to Zachary Quinto, explain this to me like I'm a 4-year-old. Is the tension in that scene is incredible.
Yeah, yeah, but the thing I love about that scene in that movie the most is that you can tell all the characters have history and they are all like siblings that resent each other and they all want to appeal to daddy and be his favorite.
Yeah.
Like you get like anybody who hasn't seen Margin Call, you will see all the side characters played like Demi Moore and Kevin Spacey. They all hate each other.
His relationship with the Jeremy Irons character is so complex, man. Such a great film. I love it.
Yeah. Cannot recommend Margin Call enough. And God, wouldn't it be great if Hollywood could make movies like that again? Like low budget. They probably made it for like $10 million.
Dude, American film peaked after 2010, 2011, maybe 2012. We haven't been able to really capture the world after that as well. With all these like superhero movies. I don't know.
Yeah, like I saw a great video on Instagram. This guy talked about how it's been decades since a new iconic character was created in a movie. Like when was the last time there was a Darth Vader?
Tropic Thunder. That movie gets quoted in my room 20 times a day. Zoolander. They were silly films, but they changed the culture. You know what I mean?
Yeah, I think
we haven't had movies like that in a while. It's very postmodern that way.
Well, like comedy was killed a long time ago. Like,
yeah,
do you remember
cancer to comedy? Or like, remember American Psycho, Memento? Such great movies, man.
Yeah, if you look like if you look at like most popular movies of 94, 95, 96, 97, like to 99, it is shocking how many insanely creative movies came out on extremely low budgets. And meanwhile, we have Disney serving up these like $400 million piles of trash that make no sense, that have bad special effects. Oh my
Eternal
God.
Sunshine of the Spotless Mind, Lost in Translation, if you like indie movies, is a Hurt Locker. Such an incredibly vivid depiction of a EOD person, you know. Just I don't know what remember District 9?
Yeah.
Why can't we make good movies anymore? That should be the next topic in our next podcast.
And it's like, you know, and like we'll end this. Like, if you want to see all different types of people from all different backgrounds coming together, you would have seen it in the audience at like the 40-Year-Old Virgin or Wedding Crashers. Like everybody was there.
Great movies, man.
And everybody was laughing.
Why can't we make a There Will Be Blood or No Country for Old Men anymore? It's a legit question.
I think that was the end of cinema.
Yeah, probably for a while.
Very sad. Okay, folks, I apologize. We ended on this massive downer, but I hope you love. By the way, if you really wanted to hear a downer, you should have been on before we went live. But okay, everybody, I hope you like, comment, subscribe, and if you want to learn from JR, there's links down in the description below. Make sure you go down there and click and enter your info. And everybody, good luck out there and have a wonderful day. JR, thank you.
Thank you, sir.